How's everyone feeling? You pumped? Right? You're dreaming of Shiraz and Sauvignon Blanc in about 2 hours from now, or you really want to get deep in the weeds and do a bit more learning, because we've got two cracking panels coming up. And at 4:30, just to really, we are going to hear from 41 people in a massive pitch fest, 30 seconds each, across FinTech. It's going to be wild, it's going to be fun. You want to be here for it, so don't miss that. But in the meantime, is Australia built for innovative FinTechs? Well, we heard, of course, from the opposition spokesperson on the digital economy, Paul Fletcher, just before the afternoon tea break. Now we have four amazing panellists to explore this idea. I'm going to just kick it over to you. Chris, Tony, Michael, Samira, you guys know what you're doing, you know what you're talking about, so I'm going to shut up. Over to you. Give them a big hand.
Thank you for the energy. That's actually what I was trying to rile up as well. I know it's later in the day, but great energy. Okay, so welcome to the panel session. Is Australia built for innovative fintechs? This is a question that I personally am very passionate about as a fintech founder myself. And so my background as CTO of Elbait is, Elbait is a cryptocurrency exchange built out of Melbourne locally. So we are a local-based exchange, 8 years operating, close to $100 million in crypto transactions. And so we've seen a lot of the fintech landscape as it's progressed here in Melbourne. So I'm really excited to host this panel with our amazing panellists. So we are here with some of the most forward-thinking companies shaping the future of finance in Australia. We have Hello Clever, which is innovative embedded payments and loyalty platform, to Change Financial's advanced card payment, to Thriday's all-in-one accounting and invoicing software for solo business owners. So each of these companies is driving change and redefining what's possible in fintech. So let's explore what is actually driving this innovation in Australia. So let's get to know our panellists first. Michael, let's start with yourself. Please introduce Thriday.
Yeah, so Thriday was designed to streamline financial admin for small business owners, and we've been around for roughly 3 years now. And we're sort of competing with your Xeros, banks, and we're sort of, the main proposition is that you don't have to use all these separate software to manage your admin. You can do it all in one place and it can be done automatically.
And moving on, Tony.
So Change Financial, we're listed on the ASX. We've got two core products. Our first one is Payments as a Service platform. So that offers card issuing, card management and transaction processing. So we're a MasterCard issuer in Australia, New Zealand and the US. And then the second product that we have is a payment testing piece of software. So that tests systems in terms of making sure payments are processing as they should in accordance with scheme rules and the like as well. So we are a B2B business as well.
Thanks, Samira. I'm Chris Haylock. I'm the Head of Strategy at Hello Clever. Hello Clever is been around for 3 years now. We focus on providing real-time payments and embedded loyalty solutions, both B2B and B2C, and both online and in-store.
So I was really excited to be working with these gentlemen here because we've got a really wide array of types of businesses and types of fintechs. So we really will touch on this question at a broad level. So Michael, let's start with the idea of capital, right? So driving innovation, there needs to be capital to support these ideas and new technologies. So at Thriday, you had a very successful crowdfunding raise with a record of $3 million in 2021. And then shortly after, in 2022, you received investment from NAB Ventures. So can you please explain to us, why did you go down this kind of funding pathway?
Yeah, I think it's an interesting situation for us, and I think it's something that's very much relevant to the topic. So building a platform that has banking, accounting and tax, there was a huge amount of both technology development and then also adherence to regulatory requirements. And as a result of that, it wasn't I've run a startup before where you can sort of maybe bootstrap it or raise a small amount of money to get it off the ground. With Thriday, we needed to raise a more substantial amount of money. And in the Australian market, that can be slightly challenging if you're an early stage business. So we explored the crowdfunding route because it gave us an opportunity to raise a slightly bigger round, but also build a community around our product. And that was very successful for us. We used the virtual platform. And I think through that process, that actually spurred on some of the innovation of how we built the product, because we had a community of not only investors, but actual customers that helped inform the product, the roadmap, and how we designed things. We were very lucky, though, that I think roughly a year later, which was just prior, or just actually during the downturn when that started, that NAB Ventures jumped in and supported us as well. And I think if you're a startup, I think that is a great opportunity in Australia. So whilst perhaps the VC market is a little bit smaller here than in other markets, I would definitely say the strategic investor route, when you think about the big banks, super funds, etc., that's a massive opportunity. And I think that is what is spurring a lot of the innovation right now is banks and strategic partners supporting early stage businesses.
Fabulous. Yes, virtual is another local fintech innovation. So it's just, I love the idea of partnering with local innovation to achieve great things. So moving on to Tony, which has a different capital journey. So Change Financial is listed on the ASX. Can you explain to us, how does being publicly listed company affect your ability to raise capital and fund future growth?
Yes, I think any business that's really in that sort of startup innovation phase, capital is always going to be sort of top of mind. You've got to be able to fund the business. It's the thing that is the absolute critical. It's always been top of my mind, because you can't innovate if you can't employ people or the technology to actually deliver that. So, as a listed company, there's pros and cons of being listed, and I think there's certainly a lot of overhead of being a listed company, but one of the pros is access to capital. I've been in the business now, I've been in fintech sort of for 10 years, larger fintechs down to Change Financial we're at that smaller end. We've done numerous capital raises over the 3 years I've been there. The markets have changed a lot, and I think everyone who's sort of in this room and outside would probably have experienced this in terms of raising capital. I think if you go back sort of 3 or 4 years ago, if you're growing quickly, investors are throwing cash at it. And they're going, well, you're a growth engine. Your bottom line, I'm not too concerned about that. I'll just look at your top line. What's your business growing at? And I think when we saw the interest rate rises coming through, there was an absolute shift in markets. And I think it was a shift in private markets and it was a shift in the public markets. And we certainly felt that as well, where when you go out to raise capital, it was your growth, the thinking around growth was secondary. The sort of catchphrase we would always hear was, we need to see a pathway to profitability. And that was, every investor was saying, where's your pathway to profitability? We want to see that. We want to actually understand, are you close to or at cash flow break even as well? So it's really sort of had this shift, and we've done, as I said, a couple of cap raises. We've finished one 3 weeks ago as well. And the reception you get is that sort of on the cusp of profitability and a clear pathway to that is very different from when from what we were experiencing sort of 3 years ago when we were raising capital and we were further away from that profit curve as well. So I think being listed, there is greater access to capital. Your shares are traded, your securities are traded on the market. So there is always there's a value. People are ascribing a value to your equity in the business, so it can be freely traded there. But now it is still challenging to raise capital, but it's that sort of ticket to ride is coming into profitability, cash flow self-sustaining. that you get past that, and then the investor's saying, well, what are your growth prospects like? What's your sales pipeline like? So it's sort of flipped itself in my view now that they're looking at the fundamentals of a business, not just the growth. But in essence, I think one of the upsides of a listed company is access to capital in market.
That's really interesting. I've always wondered from a startup to being listed what that journey is like and what changes. So that was really great to hear from your perspective. So Chris, from Hello Clever, you've actually found success through international investors. Can you please explain to us why that decision was made to go overseas?
Yeah, I think I don't think it was ever a given that Hello Clever would raise funds in Australia. Hello Clever was really conceived as a global business, and the idea was that we would consolidate, prove our solution, consolidate our business in Australia, and then quickly expand to other markets, which is something that we're doing. So, yeah, as I say, it was never given that we would seek funding, solely from Australia for the sake of it. And I think at the time, just going back, 3 years or so, it was a lot easier to raise funds, particularly in markets like Hong Kong, Singapore, which is what we did. Going to your point about reaching that path to profitability, that's something that we've achieved already. So now we're entering that phase where we can raise additional funds and expand quickly into other markets based on a proven solution here in Australia.
Sorry, can I ask a question on that? Did you notice a shift in investor appetite when you sort of hit that inflection point and hijacked you?
Personally, I did, and it surprised me. The response was great. Double down. Yeah. Don't take the foot off the gas. This is, the challenge now is to repeat that in multiples.
You're fabulous. So, we can find capital through multiple different ways, and this is 3 examples that we just spoke about. So moving on to the other side of supporting innovation, we've got legal and compliance challenges that we need to get over. So in Australia, we are notorious, or maybe we are celebrated for our very stringent FinTech regulation that we do have. So I'm going to ask the panellists what they've seen and what were the hurdles that they have faced. So starting with you, Tony, Change Financial is now a card issuer in Australia and New Zealand. Given that card issuing, like broader payments, sees a lot of innovation, do you find any challenges to innovate from a regulatory or compliance perspective, or even challenges that you've seen from large incumbents?
I think in terms of our business, we're dealing with a lot of client money these days as a card issuer. So you're handling and you're holding a lot of client money. So there's an expectation certainly in market and of ourselves around the regulatory and compliance framework for that. I don't see that the regulatory or compliance framework is really sort of crimping our innovation. I think it's those frameworks there, the regulatory environments there, is to protect us as a company, protect clients and end consumers with funds as well. I think personally from experience, what we've found in Australia and New Zealand, probably what is more challenging for us from an innovation perspective is the incumbents. As a business that's sort of emerging through, we're much smaller than a lot of the established financial institutions or players in market. When you're coming in to sort of disrupt, trying to do something different, we've sort of found that reluctance creates those challenges. And typically where they're sort of playing and what we're finding is, one, it makes it harder to do things, but 2, some of them have these sort of very high capital requirements or expectations that is not really transferable from a financial institution to a fintech. We're not a regulated financial institution per se. We're not a bank, so we don't have an extensive balance sheet or cash holdings like a lot of the incumbents in our space. when we move into that space, there is that reluctance that we've seen, but you've got to sort of push through that, try and get that scale and become more relevant. And then it's sort of, they've kind of got to deal with you as well. So we've found those sort of early doors challenges, a bit of that sort of teething to deal with the incumbents, really, that's sort of found it harder for us to push through. And where that makes it harder for us is you've got to get that traction market, you've got to scale, because at the end of the day, innovation and continued investment in your technology requires money. And we've just talked around capital, raising capital. You've got to get profitable. And for us in our game, you've got to get scale. Payments is an absolute scale game, as everyone would tell you. So pushing through there and really you've got to go toe to toe with the incumbents, and you've got to put your case forward, because it's very easy to get blocked out of in that sector. So that's probably more the challenge we've found is sort of taking on the new sectors and pushing in against incumbents.
Yeah, well, that's really good to hear that actually the legal challenges and the compliance challenges were not a hurdle, but actually the partnering side and maybe the open-mindedness side was the challenge. So, Chris, Hello Clever just made the Forbes Asia 100 to watch list. So, innovation is a key criteria to this. So, how do you make that balance to create an environment of innovation, but also making sure that we are maintaining compliance?
So this is something I could talk all day about, but I won't. So I'll just focus on the fundamentals. And that, I think, the starting point for innovation is diversity. And I don't just mean cultural diversity. I mean diversity of the skills of the people in your organisation, their background, their professional backgrounds. I think, it's very rare that great ideas and great innovation arrive, fully formed to one person. It's more likely that great innovation is a result of a collision of ideas with, from people with very diverse backgrounds. So I think that is the foundation. And this might be a controversial thing to say in a room like this, but if your innovative, shiny new fintech is staffed, primarily by employees of, ex-employees of the big four banks, you're probably not, in my view, going to achieve as much innovation as you would if your employees had more diverse backgrounds. Yeah.
Chris, we had coffee earlier, and you mentioned that Hello Clever was one of the first companies to actually integrate Pay2 in Australia. So that was over 2 years ago, and that is an example of an innovation that requires some regulation, that requires partnership with banking. How did you manage through that hurdle, and what were some of the lessons that you can share with us?
It was. I was just thinking this today. It was over 2 years ago, just over 2 years ago. We were the first to. Hello Clever had a Pay2 enabled checkout, so one-click checkout using Pay2. So I think it was an RBA employee on sort of day 1 or 2 of that launch bought something from one of our merchants as the first kind of real-world transaction to do that. And obviously that was a decision that we made very early on in the piece, and I guess because we're set up to make decisions very quickly and to execute very quickly, we're able to do that. We don't, have a legacy environment where we have to, approve things by committee, or if we think that something is worth doing, we'll do it, and we'll do it very quickly.
Yeah, I certainly agree. A lot of the innovation that, at least from my perspective, is because, at least with the startup sector, is because we don't have that legacy, that incumbency that you were speaking about. So that is why we are seeing so much innovation from the newer sector. So, Michael, Thriday does banking, accounting, and tax. How did you handle that from a legal perspective and ensuring you developed an innovative product but remained compliant with these various regulations? Because that is touching on a lot of different sectors of legal.
Yeah, definitely don't do a banking, accounting and tax startup. And I would say, to Tony's point, scale is important. I think we found it very challenging earlier. I would actually estimate that 30% of our budget was allocated to sort of legal, insurance, information security. And when I think about that, that absolutely pains me because that money ideally, it's important, but if that was 10%, that could be another 20% we're investing in innovation. So I think there is an important thing there, and I do wonder if the government could do more. I guess we're a unique scenario, but it felt like, like I said, a lot of our money in the early days was going to that area. As we've scaled and we're now at a healthy financial position, it's less of a big deal, and I think, to Tony's point, if we keep scaling, it's probably a fraction of what we spend. But in the early days, it's really important. You have to get that right, but you have to try to do it in an efficient way. Even with that 30% we were spending, we were lucky that my co-founder's a lawyer by trade, so we were able to actually cut down a lot of the legal costs because he was often negotiating and drafting the original sort of terms of an agreement. So yeah, look, I think. One of the dilemmas I have, and I've often pondered this, is what level of sort of friction do you want a startup to experience? You want the friction in the sense that they're not launching something that puts their clients or their clients' monies at risk, but you want to get the balance where you're not sort of hamstrung, these startups that could become something big, but they just don't have that capital. I'd also say that when I look at sort of overseas versions or variations of Thriday, they seem to be able to raise a lot more money. Obviously bigger markets, bigger opportunities. So that sort of, you're getting, I think in Australia in a smaller market, but you're getting the same level of like regulatory expense that a startup in the US might have, but they're raising 4 or 5 times what you're raising here. So it is quite challenging, I think, and for me, I think it's an important area that we need to look at over time because ultimately, we were lucky we were able to raise some money, but a lot of startups don't.
Yeah, absolutely. I mean, even with Elbate's experience, in our first 3 years, we only had a budget for compliance and legal. We scrapped our marketing budget and we just kept it at legal. So I hear what you're saying and I completely agree that, yeah, the hurdles are there in the legal sense, but what we're saying here is we don't need the hurdles to go away, but more support to actually achieve those hurdles because those hurdles are there for very good reasons. Consumer protection absolutely at the forefront. So I wanted to close off our discussion, bringing it back to our question, is Australia built for innovative fintechs? So before I get our panelists' final view on this, I wanted to share some data that John Henderson from Airtree shared on Forbes. He writes that the capital investment, so VC investment in Australia is a starkly 0.18% of our GDP. Now, when we compare that to, for example, Israel or the UK, they are 5 times greater. So Israel, for example, has 0.77 of their GDP in VC capital investment. So these are just the numbers that really show we are very capital lean in Australia in our investment into innovation. However, there's a double-edged sword here. We do really quite well despite the lean environment. We have been able to produce 1.5 unicorns for every $1 billion invested. Now, when comparing to Israel and the US, for example, they've only been able to produce 1.1 unicorns per $1 billion invested. So we are in a very competitive environment here in Australia, but when we are supported, we do achieve immense achievements. So, panelists, one by one, let's go. What is your final view, considering your journeys you've been on? Is Australia built for innovative fintechs?
I think what you said at the end was exact microcosm of how I feel about it. I think we were able to create very successful businesses in quite trying circumstances. I think that initial friction creates resilience. It creates businesses that are more fundamentally sound. They're not it's not vaporware, but it's hard. And we need to increase that investment. I'd also say that stat you mentioned, whilst there are VCs here, there's also what I would call a tier of VC that are simply follow-ons. They do not either invest early stage, or they only invest once another leading VC takes the lead. And that for me is a gap. I'd love to see a bigger diversification of lead investors in the market. At the moment, they all seem to sort of cloud around a handful of startups. So if we can increase that investment, increase the diversity of investment, we've got the founders here, we've got the ideas here to make them a success.
And I think going off what Michael says there, I look at the end consumer as well. I think Australians, early adopters with a lot of technology, the FinTech space, I think at the end of the day, that is really what everyone is doing as a startup, is delivering or developing and delivering products that people want and need as well. So as early adopters, I think that actually creates the demand. I think we're a very resilient nation of individuals, as you said, Michael. You've got your challenges there. Capital is undoubtedly a challenge because of the size of our population relative to overseas. That's why you're seeing that capital is much more constrained, which really means you've got to have the strongest that are going through and pushing forward there. But at the end of the day, if I look at it, it's really sort of demand driven as well from the consumers, and you continue to push forward. And if there is that demand there, that's going to really help those businesses like ours, like all of us, that we're pushing into that space. So I think Australia is well suited for startups.
Everything they said. And also, I think, there's been some fantastically innovative companies come out of Australia. I think the ones that truly succeed are really built from the ground up to be global solutions. Australia is a very small market comparatively, and unless you have, at least a strategy to expand quite early on in your growth, your chance of success is reduced.
Well, thank you so much, panellists. So I will actually have one more comment. I heard one of the other panels talk about a very similar topic, and they were saying, well, I think we need to keep up our demands for innovation. Just because we are in a tighter environment, it doesn't mean that our demands and our standards should lower at all. Let's keep the standards high, and if we're partnering with any other fintechs, let's keep the demands high. Make sure we are asking the best standards from all of our partners and of ourselves, and that will just lead to actually achieving what we need to achieve. Okay, well, thank you so much. We'll leave it here.